Jim Colby, Muni's got a nice little bounce last week when Fed Chair Janet Yellen decided to stay dovish. So what does that mean for municipal bonds from here on out?
Greg, Muni's got a boost, not only from Janet Yellen, but from the first quarter of this year in terms of new supply coming to the marketplace. It increased yields and increased the opportunity for performance for munis going forward. So the supply-demand equation actually is a positive one for munis, probably going through the next couple of quarters until we really have a sense from the Federal Reserve what they're going to do and when they're going to do it.
And what are your expectations for Janet Yellen? Are we going to get a rate increase later this year or mid-year? What do you think?
I expect that the pressure will be too great on her and the rest of the Fed board to resist raising rates, if in very small increments, throughout the rest of the year. I'm not predicting when that's going to happen, but I think it's inevitable that it will. Yet, I think the stage is set for fixed income to still be a good investment asset.
And another thing you're watching down in Washington is the transportation bill and how that affects munis and muni performance going forward. Let's talk about that.
Well, I think we know, as we've seen in headlines, Congress has not funded the highway transportation bill. And what that means for consumers is there will continue to be potholes. There will continue to be substandard bridges, roads, ports, airports, all the facilities that this country is dependent upon for its economy and as well as transportation. Without the funding, then the municipal bond market is likely to see reduced supply. Typically and traditionally, funding for infrastructure has occurred in the tax-exempt realm. That hasn't happened yet. There are trillions of dollars worth of projects that need to be done. The municipal marketplace stands ready for that, but the groundswell has not produced a bill yet in Congress.
And then finally, what about tax time coming up April 15th? Why don't you just make the case for munis once again when people start having to pay checks to the IRS?
Well, this is the time frame between now and April 15th when typically investors look for some asset to sell, to liquidate, to pay their tax bill. The opportunity that exists in munis is that coming off a high supply couple of months so far this calendar year, yields are elevated and relative value, the value of the tax-exempt coupon relative to other asset classes is as high as it's been over the last 2 or 3 years. It's an attractive asset class. And if you sell munis, that only puts pressure on yields going a little bit higher, which creates a better entry point after April 15th.
All right, thanks a lot, Jim.
Greg, thank you.
Thank you for watching The Street.